Today's interview is with Jennifer Barner. Jennifer started out in single family after going to a Rich Dad Poor Dad seminar and doing the coaching. And she then grew her portfolio to quite a sizable amount. But then for a while, she'd been looking to get into multifamily and eventually got in and bought a 72 unit, right? Think about that for a second. 72 unit as her first property. She syndicated. So she talks about all of that and how she did it. So really interesting interview today. So stick around for all of today's awesomeness. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Jennifer Barner. Hey, Jennifer.
Hello.
How's
nice
it
to
going?
meet you.
Nice to
meet you in
meet.
person.
Yeah, you too. This is the cool thing about Zoom, right? It's essentially like meeting someone in person, not quite, but kind of close to it. So yeah, very cool, very cool. Well, excited to have you on the show, excited to dive into today's conversation. Do you want to tell us a little bit about yourself before we kind of go wherever the conversation takes us?
Yeah, absolutely. Well, I got into real estate 5 years ago from an introduction to Rich Dad Poor Dad. It kind of blew through the Kansas City area, and I fell in love with the whole concept of buying real estate. And there's only so much shopping you can do, and so it's fun to go buy other things other than purses and shoes and things like that. So anyway, I got a taste of real estate through the Rich Dad and realized, man, I want to go bigger, faster. How do I make that happen? And so ended up falling in love with the multifamily space, and I've been just pouring into that the last 5 years. I have 4 children. I'm happy to say they're in college and one just got married. So excited about the stage of life we're in, and we're officially empty nesters.
Oh, wow. Okay.
Yeah.
Wow. So you have 4 kids that have left the household.
They keep coming back because of COVID, but yeah.
And for food, maybe, and a little bit of pocket money, maybe.
Yeah. Yes.
Well, I've got to say, for anyone listening on the podcast, you don't look like someone who has 4 kids that have left the house. You look closer to my age than any of that. Maybe you had your kids really young. I don't know. But
Well, thank you. I'll take that.
Well, that's interesting that you started, most people start with a Rich Dad Poor Dad book, but you started with an event, it seems like, right? Is that correct?
Well, I did the Rich Dad Poor Dad program.
Okay. Yeah, that's what I mean.
Yeah. And then leaped into that and found that, man, you got to do a lot to get anywhere with one transaction. There's a lot involved. And I figured there's got to be a better way. And so that kind of led me to multifamily and found a coach in that space. And, that's all about a team, doing it as a team. And I mean, there's nothing any simpler than that, in my opinion.
Yeah.
But so I just got my first 72 unit under wraps. So that was good and ready to move on.
Okay. Definitely ask you a lot more about that. But I'm always interested in what takes someone towards real estate, right? What brings them to real estate? Because that's always an interesting subject, right? Everyone's different, it seems like. And there's always, similar circumstances to some extent, right? Financial freedom and better life for them and their families. But was there anything in particular that drew you to real estate above all else?
Well, so I have a finance degree.
Okay.
And when I went through school, nobody shared real estate or that it was even an investment option. So here I am in my 40s and just getting exposed to real estate. And I thought, God, I kind of got gypped, with my education. How come I'm just learning about this? And I'm learning it through it, having to pay all over again for this education. But I would say that really, I'm grateful that I found it. What I'm hoping to gain from it really is financial freedom and the ability to retire my husband maybe a little early, and I also discovered that I have a family that gave me up for adoption. My mom and dad I found them just in the last 5 years. And so a lot of my motivation is one day to maybe travel with them a lot more often and get to see them. I mean, I ended up having three full-blooded siblings, and my parents got married. I mean, it's a crazy story. But anyway, a lot of my why I do what I do is because of my own my immediate family, and now I've got an extended family.
Yeah, that's powerful. It's always powerful to have a good why, right? A reason why you do it. It's nice to have financial freedom is a good sort of little buzzword or phrase, an idea, but if you have something that's driving you a lot more, I think it's a lot easier to do the hard things, right? Because it's everyone could do the easy things, right? Like look at properties on Zillow or LoopNet or
Yeah,
whatever, right? But it's doing the hard yards that is
yeah,
challenging, and you need that why and that driving force that's not just something fluffy, something really that's important to you. So I'm glad
yeah.
you have those things. I'm glad you shared. What was the so you did that Rich Dad Poor Dad course. What was the first investment that you bought? Do you remember?
Well, so I found, when you're going through that class, you feel like you're drinking information through a fire hose. And after 3 to 4 months, I felt like, gosh, I'm not getting anywhere. All I'm doing is I feel like I'm back in college learning all this information. I'm just sitting behind the desk for hours on end. And that first transaction was a single family home. And I had gotten beat out on at least 20 transactions prior to that house. And so back in 2015, everybody said, "Oh, it's such a hot market. I mean, you're just going to have to overpay if you want anything." And finally, I saw a house and I just decided to go for it. And of course, I overpaid and I was stupid, but nobody knew that that wasn't the top of the market. I am so grateful I didn't listen to all those naysayers, and I went ahead and got that first transaction under my belt because it was terrifying, you know? But I knew that if I just didn't take the leap of faith, I was never going to take it. So I jumped in. I didn't make the return that everybody says you need to make, which is meeting the 1% rule. I didn't meet that, but I got it done. And then every transaction I got better and better, and that's what you got to do. You just got to get in the game, right?
Yeah, for sure. No, and I'm sure you thinking in 2015 you overpaid, right? I'm sure that property's gone up a little bit in the last 6 years, especially in Kansas City, right? Kansas City is where you're at. It seems to have exploded, I would say, right? Especially for somewhere
It
in the
has.
Midwest, it seems to be like a very hot market right now.
Yeah. So now I'm meeting the 1% rule.
Right. It was all part of your plan, right? You knew this
Yes,
all along.
it was absolutely.
Yeah, yeah.
Yeah.
So, maybe talk us through that first deal. So when you buy, so you've done this Rich Dad Poor Dad course. You had some education, right? But obviously everything's flying around in your head. When you were looking at that first deal, what were you looking for? Was it just a rental property? You were looking to do a burr? And with that, what kind of numbers were you looking into? Were you just looking at something that met the 1% rule?
Well, I got a little overwhelmed with, the Metroplex is a big area, right? And somebody says, just go buy a house, and you're like, what do you mean, just go buy a house? So, finally somebody said, zero in on a zip code.
Mhm.
And when I finally zeroed in and I really started analyzing that particular zip codes in an area I felt safe. I mean, you can go buy a house anywhere, right? But I think the first thing you got to figure out is, where do you feel safe and comfortable going to regularly if you have to, right? If you're renting this out. And that was my strategy, is you always want to know what your exit strategy is before you buy it. So my strategy was to buy and hold it and put renters in it that were possibly millennials coming out of college. And it was kind of by a hipster area of Kansas City that people desire living. So I just got really head set on what do my numbers need to be. And and I didn't look at anything outside of that. I just got really, really hyper focused on an area. And so anything that came on the market, I'd go see it. And what I really discovered though later is you get the best deals when they hit the market first thing in the morning, like at 6 and 7 a.m. Um, I was able to get a couple transactions because I was the first one there at 8 a.m. And I already said, write up the contract. I already know I want it. The numbers already work. I mean, so that's kind of the second, third, and fourth venture. But that first one, I was really looking for something that was bigger than a 2-bedroom, 1 bath. So I ended up with a 3-bedroom. It had flexibility in that, if one person had a lot of stuff, it had storage room, had a backyard. I mean, I just wanted to be in a highly desirable area more than anything.
I love what you said there. I love like, because most people don't, right? I remember when I first started looking, you just want to look at everything. When I start looking in Vegas for an investment property, I was like, if I look at all of Vegas, my chances of getting a deal are much bigger because I'm looking at more properties, right? Which essentially would be kind of some kind of logic, right? But in reality, it's better. It's like, just like you said, even narrow down into a zip code, so you know everything about that zip code. You know what the rents are. You know what price per square foot is. You know what are the good areas, what are the bad areas, almost street by street, right? So when something comes on the market, hey, this is a good deal, I need to go see it. Oh no, nah, that's overpriced. That's not going to work, right? You know. But if you're looking at the whole MSA, right, like I was stupidly doing, you learn pretty quickly that you can't know everything about everything, right? Unless you've been there 10 years studying it every day. So that was so smart of you, though. Was that part of your training, or was that just something that you figured out?
Well, when you're going through this training, they show you how to analyze a map, and that's part of, I was doing the same thing you were doing. I was no different. I was looking at the whole MSA and I was just going crazy thinking, where do I even, I mean, it's too much, right? Too much information. So I really that's when I said, okay, I just have to zoom in and make my world really, really tiny, get really, really proficient at that little quadrant. And that's when you really start to have success. And I mean, you can accelerate your success because the only person you're competing with is yourself, really.
Right.
I mean, you may know, I mean, and I knew other people investing in that same zip code, but not everybody's buying the same day you're buying, right?
Yeah.
And that's the other thing you have to remember is not everybody's a buyer all at the same time.
Yeah, and not for the same thing, right? There's a lot of flippers or wholesalers, whatever, right? So it's
right.
different categories, and you need to buy at different prices. Usually, when you're buying a buy and hold, you can buy usually at a slightly higher price, right? You don't need the margins to be quite the same. I'm also interested, how did you come up with the category of wanting to have millennials who are just out of college, in the hipster area? What led you towards that kind of criteria?
Well, so as I mentioned, I have 4 children that were going through college. I knew that on the backside that one of my daughters had already graduated. I knew what she was looking to move into. And so I was kind of seeing, okay, people that have went through college, they've already went through their party days, mostly. And I knew that they wanted nicer things. I mean, we've kind of raised this next generation to like nicer things. And so I figured if I could just find something that's appealing to that crowd, that mom and dad are going to be right behind them, paying rent if they can't do it straight out of college. So I felt like it was kind of like a college scenario, but I felt there was a little bit of security there. So that's kind of why I chose that market, that price.
Yeah, and it seems like that type of area as well is well primed for appreciation as well, right? The hipster area, where
right.
It's
right.
You're a genius.
Yeah, I mean, it's not the house they're going to raise their children in, right?
Yeah.
It's not that big of a house, but it's a fun, a small house that's trendy and, cute area.
Yeah, yeah. So how many properties did you do before you started into multifamily?
I ended up, let's see, I've got 11 in a portfolio with myself and my husband. And then I have a portfolio with another investor of 12 properties. And then we've got this 72 unit. And then I've been a limited partner in some other deals as well.
Okay.
So, yeah, I ended up, because I couldn't find a multifamily to invest in here in Kansas City. I mean, we went through 250 properties underwriting. And finally, I just realized Wow. The definition of insanity is continuing to do the same thing over and over and expecting different results. So I ended up going back to flipping homes and got a lot of experience that's really paid off in the multifamily space, that I'm really thankful I did. You know, a lot of people have a tendency to want to skip the single family space, but there's a lot of value and knowledge that you gain from being in that space. Like what costs are associated with a bathroom and, um, a kitchen and flooring and paint colors, all those little decisions you have to make that can be annoying at times. They really help you become a better investor in your next and future deals. And especially when you get into multifamily, you're better able to price out CapEx expenditures that you might experience.
Yeah, I agree. I think flipping has its value not only in terms of hopefully if it goes well you make money, right? But also like you said, those experiences, those learning lessons that you have, right? Because essentially, if you're buying a value add multifamily property where you're going in improving interior renovations, you're essentially flipping each unit, right? You're improving that unit, right? You're renovating those units, and to have that, there is no real difference. What's the real difference between a house and an apartment complex? Not a lot, right? In terms of the unit, right? What you're going to put in there, how you're going to do it, like what kind of renovations you're going to do is essentially kind of, you understand that from flipping. Right now, obviously flipping, you're making it nice so you can sell, and in a rental you want it to be sturdy and to not be able to be damaged, but essentially the understanding of that is the same. So I think, like you said, there's a lot of value to actually flipping, and I think that's a good stepping stone for people. You don't need to do 100 flips, but if you do 3 or 4 and you have the understanding, yeah, I think that's really cool. So wait, so if I'm correct, you were doing all these single family homes and then you went and bought a 72 unit?
Yes.
Does that seem right? Wow.
Yeah. Yeah.
So when doing that transaction, so I think you said early on what essentially happened was as well is that you were doing all these single family homes and you're like, okay, I got to put all this effort into buying this single family home, duplex, whatever you're buying, but I can just buy a multifamily and it's essentially the same work. There might be a little bit more, but essentially it's not. If I'm buying a 10 unit or I'm buying 1 unit, it's not 10 times the work, right? It's just a little bit more work. So when you had that realization, did you then go and do some training? I think you said maybe that you
I hired a coach in that space, and just really more than anything to learn how to run numbers and make sure I'm evaluating an MSA again the right way. I mean, you can go into any town and buy a multifamily building, but again, when you go to sell, how many buyers are you going to have lined up? You always again have to look at the exit strategy and also rent collections. Who's going to be paying the rent?
Yeah. Well, when you're evaluating, so when you're evaluating an MSA now, how do you do that? How do you go about evaluating a market?
Everybody's got their different criteria, but I think you have to first look at what kind of note or loan are you going to get on it. Is it going to be a recourse or non-recourse? And if it's going to be a non-recourse, Freddie and Fannie have different ideas of what they're willing to lend on. So it's important probably to have some conversations with somebody that does that type of lending before you get down the road of, hey, I want to go into this market. And then you find out, well, they won't even lend there because the market's too small. So what I look at is a population greater than 85,000. I also like to have a median income that's 3 to 5 times greater than the national average, whatever the market rent is for that market. Trying to think what some of my other things are. Really, it comes down to population and median income, and also not a one-horse town. I try to be in an area that you've got multiple industries and different employers there, so that you really, if you lose one particular manufacturer company or one particular employer, it's not going to kill your cash flow coming in. Kind of like the universities are really kind of hurting right now because of COVID.
Yeah, that's good. It's interesting. What I know, but for people back home, why do you look at something that's 3 to 5 times the income is 3 to 5 times what the average rent is for that market?
Well, first off, you want to make sure you can eat food, and if everything's going into your rent payment, you have nothing left to feed yourself and your family. So you want to make sure that it is 3 to 5 times greater. That's just a national recommendation that you don't exceed your income when it comes to whatever your rent is, and you want to keep it at a third or lower. So that's why I say 3 to 5 times greater than your income or your monthly rent.
Yeah, yeah, that's what usually property managers usually look for, right?
Yeah.
Even 3.5 times what your income needs to be, three and a half times what that
Yeah.
monthly rent is or annual rent is. Yeah, yeah, that makes a lot of sense. So are you investing in Kansas City mostly?
I am not. I
Okay.
I finally gave up on Kansas City. Now, my single families are all here. So I drive to them and we manage those properties. But as far as the apartment buildings, I have investments in others. And then this one that I just closed on, it's in Arkansas, of all places.
So
Yeah.
how do you fall upon Arkansas?
Yeah, well, the last 3 years I've been taking my boys to school. So I have one that's a junior, one's a sophomore at the University of Arkansas in Fayetteville. And every time we'd take them down there, I kept saying, gosh, look at all of these cranes everywhere. There's so much growth. How come I'm not here? And I just convinced myself that, well, my boys are going to graduate and move on, and I won't be coming back down here. So why would I invest here? You know, as it, I could shoot myself now. I should have went rewind it, and should have went here 3 years ago. Just because you don't live there doesn't mean it's not the right market for you. And I wished I would have changed my mindset 3 years ago, because there are other deals outside of your backyard, and that shouldn't be your only motivator. I really got really honed in on Kansas City though, because I went to a conference, and when I told people I was from Kansas City, everybody's like, oh, I want to know when you find a deal here because we'll invest in it. So I just assumed I'm going to be boots on the ground in Kansas City, and that all the money will be there when I find the right deal. But if everybody else is coming into the area and driving the cap rates down to the point where you can't make any cash flow, it's really tough to get a deal done.
Yeah, yeah. So this 72 unit, what was it about this one that you liked?
It is in a very stable area. It's next to some manufacturing plants, some industries that are solid. They're not going anywhere. So this particular apartment building is geared towards shift workers in these manufacturing plants. So it's just a good working class environment for our complex for these shift workers. And again, they don't all work at the same company. So we've got a variety of industries there.
Interesting, interesting. Do you mind me asking how much you guys paid for it?
We paid 3.7 for.
Okay, that's pretty good for 70 plus
72.
units. Yeah,
Yeah.
yeah, yeah. So what's the business plan on this one?
Just, because of COVID, we're not getting all crazy and doing a massive value add or bumping rents up $100, $200. We're just going in and cleaning up inefficiencies that exist in the property management. And we'll do some value add to some units as we see fit, but very, very light value add. So door handles, fan upgrades, lighting upgrade, faucet upgrades as needed.
Yeah, that's cool. And how did you finance this? I'm guessing agency debt?
Yep. Yep. And we used Old Capital
Okay.
as our lending partner.
So is it just, how are you funding this? Was it you and your husband funding this, or are you bringing on investors with that?
No, so we did syndicate this.
Okay.
So we have other partners and friends and family that have joined us to take this building down.
Very cool. Was there any, obviously a large property like this, you've done real estate, you've done obviously very well for yourself. Was there any challenges in terms of, one, getting the seller to take you guys seriously, and then secondly with financing? Obviously they have requirements, right, with agency debt.
Yeah. So one of the biggest surprises, you have to have had 2 transactions that have went full cycle and a multifamily transaction to get agency debt right now. So you and I, I couldn't call my neighbor next door and say, hey, I found this apartment building. You want to go do this with me? Um, Freddie or Fannie aren't going to support that transaction. So I had to go out there and find somebody that had the experience, that had went full cycle. So that was the first requirement, is I had to partner with somebody that had two transactions that had went full cycle. The second thing I would say is we had to have a year's worth of principal and interest in reserves for COVID.
Mm.
And that was probably the biggest hurdle there. And it really wasn't a hurdle. What we plan to do is put that money aside for reserves and then use that money up for CapEx, assuming we're not going to have to use that due to COVID.
Right. Yeah, very interesting. So essentially you brought someone in to sign on the loan. Did you bring a key principal in to sign on the loan who had that experience? Is that what you guys did?
Well, so me and my seasoned investment partner, we signed on the loan together.
Okay.
And I had enough experience and a balance sheet to be able to split that with my partner.
Okay.
Yeah.
Very cool. And then, so it is, how did you go about bringing this up with, were you already priming investors and friends and family and people, or was it this deal came up and you were like, hey, I've got this deal, are you guys interested in working with us? Because I'm sure everyone wants to raise money, right, and go bigger deals. I was just interested in how you did that.
I had taken my eyes off of raising money for an apartment building because I had went back to flipping homes. And when I got it, I was kind of like, oh my gosh, I hope people remember that I was, going out there and trying to buy something so that there'll be money there. And as it turns out, one of the things that they always recommend you do is that you post on what you're doing in real estate, so that people, it's not a shock to them when you call them and say, hey, have you noticed that I've been doing real estate? I mean, you don't want that to be the first phone call, right, that you make to them after you find a building. You want to be having those conversations in advance. But surprisingly, if you do, and if you're consistent about posting on your Facebook page or wherever you go to post, if you just stay consistent there, the money will be there for you.
Yeah. Well, how were you doing? How did you go about that initially? Was it just everyone you had met, you would say, hey, now, I'm doing real estate, but I'm now looking at apartment complexes. This is kind of what we do. And if you're interested, maybe being involved.
Yeah.
Okay.
That's exactly what I did. And I said, hey, I'm moving over from single family to multifamily. If I find something and it meets your investment returns, is that something you think you'd be interested in knowing about? And you would be surprised. Almost everybody says, yeah, absolutely. Or they'll tell you, you know what, I'm not in the market right now, but keep me posted if you do, because I want to know about it. So, maybe future deals. So the response is surprisingly, it was great. I was pleasantly surprised.
Yeah. I found that so many people want to be invested in real estate, right? There's not many people that go, oh, I hate real estate is dumb or whatever, right? Most people actually want to be involved in real estate. So it's, if you have that conversation and open their eyes that they can be involved, without necessarily getting their hands dirty and still get a great return, still be part of the appreciation, get the cash flow, tax benefits, all that great stuff.
Yeah.
People, it's opened people's eyes. So I think it's really cool. So when did you close on that, out of interest? Is it recently?
December 30th.
Oh, wow.
At 4:59 p.m. I mean, that date kind of got bumped, and then it got bumped, and then it got bumped again. And so, yeah, we were down to the wire, and we got it done in the nick of time. I couldn't believe it. But, you put Christmas, and then you add a little bit of COVID, and then you add a little bit of year end. I mean, and you just get a conundrum. So.
Yeah. How long did it take you guys to close? Was it 60 days? Did you need 90 days to close out?
That was another interesting thing, is we had said we wanted to close within 90 days. And our legal team, they put together a contract. They did 90 business days, not calendar days. But you know what? I mean, our goal was to get it closed in December, and we still met our goal. So that was the exciting thing. So it took us 60 days. Yeah, we got it done in 60 days.
Mm. And then how did you manage to, a 72 unit is a big property, right? How did you get the brokers there to take you guys seriously? Because it's one thing to say, okay, I'm going to buy a 15, 20 unit property, but 72 is a serious size property. I know people are doing 200, 300, 400 units, but for your first deal, that's, how did you get them to take you seriously?
Well, one of the things I already had under my belt is the fact that I was already a limited partner in a 403 unit deal. And then I had also invested in another property in San Antonio that was 130 doors that had already went full cycle. So, I know a lot of people say, oh, well, I don't want to invest in other people's deals. I just want to do my own. There's value in investing in other people's deals because when you go to a broker, you kind of have bragging rights to say, you know what, nobody ever says, well, are you the limited partner? Are you the GP? Are you the KP? Nobody ever asks that. They just want to know, do you have the experience? And all you have to do is say, yeah, my team's done this and here's what we're looking to do next. So, there is a little bit of merit there in investing in other people's deals.
Yeah,
so.
Very cool. Very cool. Congratulations on that, by the way.
Thank you. Yeah.
So very cool. Thanks for sharing that story about the 72 unit. That's exciting. Obviously, it's early stages, but I'm sure there's a lot more to come, and there'll be a lot of, I'm sure, interesting situations and learning experiences along the way. But that's part of the deal, right? That's part of the fun.
Right. Absolutely.
Yeah. Well, as this show is called Wrestling with Real Estate, I like to incorporate some wrestling-related real estate questions. And the first one is, what would your wrestling name be?
Well, that's a good one. Oh, okay. This is so out of character, but I'd have to say it's Jennifer, jam your face into the ground, Barner.
Oh, I love it. I love the sound of that. No messing around. Get in there and put that face to the ground. I love it. So every wrestler has a special move. What is your special move in real estate, you think?
I would say connecting with people and relationships. Yeah, so networking.
Very cool. Yeah, massively important skill, right? If you've got that skill, get a lot further, right? Net worth is your net worth. Network is your net worth, right? So you really,
right. Yeah.
What's been the biggest body slam you've taken in your real estate investing career?
Okay, so the biggest body slam, I actually have one. So we purchased a house thinking that it was a 3-bedroom, 1 bath, and the ARV was going to be X. Mm-hmm. Well, when we got in there, the whole back side of the house was moldy. Mm-hmm. So we ripped off the back side of the house, and we thought instead of rebuilding it on, we would just put a nice, make a nice deck and make a really great, awesome outdoor space. We didn't think about the ARV when we were doing that. So the big body slam there was when we went to have it appraised, it didn't appraise at the number we thought it was going to. And therefore we didn't get the sale price that we went to. So it was like a domino effect. So yeah, that was kind of salty for sure.
With the ARV, were you doing a BRRRR on this deal or was it just a regular?
Yeah, so a lot of our properties, we will get a private investor and he will finance the deal. And then we will refinance out of it 100% and we have no money in. Or if we don't like the property or where it's located, we'll go ahead and sell it. So we were planning on selling it, but it was based on, I mean, you buy everything based on comps in the area. And this one just did not play out because we ripped off half of the house and didn't add it back on. Didn't see that one coming at all. I mean, we thought we were being pretty clever.
So how did you get out of that? Did you just refinance?
No, we ended up ended up being a wash. But when you do so many flips, thankfully it gets washed out and you don't see it as a loss. So that was just one that we didn't make what we planned to. I mean, we always went in with a certain number that we're going to make this much money. And instead it ended up being like this much money. Yeah. It doesn't hurt quite as bad though when you're doing other houses.
Yeah.
So you can make up for it.
Yeah, if that's the only deal, that's a lot more, I'm sure, right? Yeah.
Absolutely. Yes. It would have been devastating.
That's interesting. So you use private money to fund how much of the 100% of everything of the purchase price of the renovation?
100% of everything. Yeah.
Wow.
And yeah, it's a sweet deal because then if the properties you want, you just get a renter in it, then you refinance out, you have no money in the deal.
Yeah. Yeah. You essentially put all that money back, right? But you have to be in for what, 75% of ARV at that point.
Yeah, but when you're running your numbers and you're purchasing, you buy based on where you need to, where
Mhm.
the bank is going to finance you at.
Right, right, right. Yeah.
Yeah. So that's the key.
Great strategy. Great strategy.
Yeah.
Um, so was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it and how did you overcome it?
Where I was too scared.
Yeah, was there a time you were scared to take action, move forward, do a deal, talk to someone, do a renovation, change
You know,
markets?
I think that I walked away from multifamily after doing 250 deals, underwriting them, submitting, LOIs. And I just kind of walked away and said, I guess this isn't my place. This isn't where I'm going to do my first apartment deal. But, 3 years later, I got a deal done. And so it's just, you have to get back up, right? Just like in wrestling, you got to get up,
Yeah.
keep going, keep.
What do you think it was that drove you to that deal eventually? You just knew that you needed to be in multifamily, or was there something else that brought you back to multifamily?
I just knew that flipping wasn't for me long term. It's a job. It's a job.
Yeah.
It is not. You're in real estate, but you're not creating passive income for yourself, right? And that's what everybody gets in real estate for, is the depreciation and the passive income. And flipping was just a job. And so I knew that long term, one day I was gonna get into multifamily. I just didn't know how, the road was a lot longer than I would have anticipated it was going to be, because you hear about these stories of, oh, I just, I hired a coach and 2 months later I had an apartment building. And I'm like, yeah, it didn't work out that way for me.
No, if only it was that easy, right? And it happens
Right.
to some people, but yeah,
Yeah.
it's nothing. And that's, yeah, and I agree with flipping as well. I told you, I think there's massive, and to anyone listening, I'm not knocking flipping. I think there's massive benefits to it, but it's not investing to me, right? It is going to work in real estate, right? It's like you said, you're continuously having to start a new job, continuously buying yourself into a new job. Whereas the idea with investing is that you invest that money and you're creating wealth on that money, right? You're using that money to build your wealth, be it cash flow, be it debt pay down, be it appreciation, be it tax benefits, right? All those
Right.
great things. Yeah, yeah.
Yeah.
Agree.
Yeah.
Well, Jennifer, thank you so much for making time today. This has been really interesting. I love your story, and not only in what you did in the single family space and doing a sizable amount of deals, but then deciding that multifamily was the place for you, and changing markets, right? And going for 72 units is no easy task for anyone, I'm sure. But you guys did it, and congratulations on that. And I'm excited to hear and see what happens next with that property and the success that you guys will no doubt have with that. So I appreciate you sharing everything that you have done today. But before we go, if anyone wants to reach out to you, how can they do so? And where's the best place for people to find out more about you?
Yeah. Well, thank you first and foremost for having me on as a guest. I really enjoyed my time with you. Loved hearing your story and how you got involved. I would say the best way to reach me is Jennifer at lighthouse-ventures, and that's plural.com. Or they can go to my website, lighthouseventures.com. Or they can send me a text, and I'm easily accessible, 913-481-8221.
Very cool. I'll include all that in the show notes and the description. But yeah, thank you, Jen. Thank you. Have an awesome rest of your day and great talking to you.
You too. You have a great evening. Bye-bye.